Your fault.
All right. Morning, everyone. Let's get going. All right. Last night's session in the States was, felt a little bit nervous at the end, I think, to say the least. One of the things I was mentioning to some of the guys this morning, I watched the close last night. We were down 15, 16 points with 2 minutes to go. We bounced up to down 11 and a half. And in the last minute, we literally tried to down from down 11 and a half points in the S&P future to down 17 in 1 minute. We were ticking 1 point at a time. I know it's at the end of the day and right there at the close, but I just haven't seen that in a long time. Haven't seen those kind of ticks in the S&P in a long time, and it felt nervous. It felt like there was a bit of a rush. This morning, obviously, you're seeing follow through there. When I woke up, the S&P was down 17 points. We've got obviously a little bit of nervousness around. I think the markets are nervous about a few things. One of them being Greece, just the lack of the ability for the market to really get going in the States. We're also going into first quarter earnings season here pretty soon, so definitely a little bit of nervousness around. So yesterday we had the Chicago PMI numbers that came in quite soft. We had consumer confidence numbers that were very good, though. We had crude oil off on the day. There's been a hell of a lot of M&A around globally. This is the biggest year for M&A since 2007, if I'm not mistaken. And so Net-a-Porter here locally, with CFR did a deal with Yux. I think that the market was very disappointed in the way that came through. Just disappointed that there's not more, that they're not seeing more of a direct cash benefit from the, from giving that asset away. I think that there's probably potentially a little bit more further downside in CFR to come on the back of that acquisition. I really just don't think the market likes that. All right, overnight in Asia, you've got Hang Seng and Shanghai, which are outliers, up on the session. Shanghai and up every day. I read one of the scariest articles I ever read in my entire life last night about Shanghai, which has been up, if I'm not mistaken, mid-80% over the last year. And the economy is kind of quite bombing out. Over 60% of the new investors into the Chinese stock market don't have, never made it to high school. And 6% of all of those investors can't even read. So you've got a point where you've got a lot of guys that are starting to throw big money at stock markets, and you say how much money can they have? The problem is that the government's centrally controlled there. They tell the banks how much money they must lend, and they don't. They're picking out from a bad bunch. So they're giving people money to invest in the stock market, and it's creating what could be something spectacular at some point. Anyway, Nikkei closing down after the yen fails to kind of close through the 120 levels. Some of the exporters under pressure. 7-year high on the Shanghai, like we said. They're throwing a hell of a lot of money at it. They're waiting some stimulus there, but and then we had Australia is under pressure, obviously, on the back of some of the commodity stocks. We have some of the commodity stocks hitting some really bearish levels in terms of breakdowns on the charts. We'll get into that in just a little bit. All right, charts of interest on the day. Another one from Charlie Bolillo at Pension Partners. This is really interesting to me. I'm going to show you guys something in a minute on the S&P and the last couple quarter ends and what that entailed. What's really interesting is that the bull-bear sentiment is basically at the highs that it's been at going back all the way to 06, and that's scary as hell. So, that's one of the best contrarian indicators that you can possibly have in the market, and bulls are at all-time highs at the moment. I have no idea why everybody's so bullish on the outlook, but they are. That's a huge contrarian indicator. Typically, when you're hitting those extreme levels of bullishness, we start to get market corrections. Right. No corporate action to report today. market data out. We had Tankan survey out of Japan, which is a little bit softer than expected. We had manufacturing PMI numbers out of China, which are actually better today. PMI out of Japan, a hair soft. We've got PMI coming across the entire Eurozone area today. That's going to be at 955 and at 10. Then we've got local PMI. Obviously, we've got I think we've got PMI in the States today as well. And then we've got mortgage apps, ADP employment change, and crude oil inventory. So we've got a decent amount of data today. I think relatively important day in terms of data, and we'll have to see how this all plays out. All right, let's get into some maps. The first thing that I wanted to show, and this relates back to that chart of the day that we're just showing there from Pension Partners, is the S&P 500. So what I wanted to show you guys is we're going to look here at the last two quarter ends. So I was talking to some of the guys yesterday and saying, geez, the last time that we the quarter end traditionally is if you look historically, are very good days in markets, and it's because you get fund managers that come in and they window dress and they send their quarterly reports out. It looks better. That's quite obvious. Okay, that's historically they've been great days. Well, the last two quarter ends have actually been soft days, and they preceded what have been really hard sell-offs of the past. In the past two quarter ends in the States. So here we're looking at, that's quarter end into September. And you can see there that was our biggest correction in the past, I think that's the biggest correction in the past 3 years, which was a 9.8% correction in the S&P, okay? So you can see there we basically had a soft quarter end, we traded sideways for a day or two, and then we really bombed out from there. Same sort of thing over here. You can see at the end of December, here is the last day of the quarter end, and then we I'm 1 day off there, it's over there, and then very quickly we proceeded to fall, call it 80 points on the S&P in 4 sessions. So the last two soft quarter ends have been really indicative of the next handful of sessions to come, which have not been good sessions to say the least. So, starting to feel at the moment, once again, like we, failing to make that breakout again in the S&P. Day before yesterday, we had that nice rally in the States, starting to feel like, hey, everything's going to be okay here, and very quickly we get a 2-day, hammering, or at least this morning on the futures. So we'll have to see how this translates, but just be careful out there. If the last two quarter ends are anything to go by, the next handful of sessions have been very soft. All right, the chart of the day that I really wanted to highlight outside of what we showed there from Pension Partners is Anglos. This is Anglos in London. We'll look at it now here locally as well. It's a shade cleaner in London. You can see here head and shoulder pattern, bombed out of that yesterday. I think one of the things, we actually sending a note out to clients on this morning. Just the basket for Anglos is totally broken. Kumba's broken. You've got Amplats that's broken. I think it was a week ago. If it's Geneva, I can't remember where the diamond auction has. It was, if I'm not mistaken, the first diamond auction in like a decade that didn't sell out all the diamonds. Obviously, De Beers, kind of the last shining light for Anglos, now potentially also under pressure. So dropping it beautifully out of this head and shoulder. This thing has a massive lower target. We're going to look here. So that we dropped out the bottom at about, call it 1042, I think was the level. That pattern is running from as high as 1260. So we're talking about over 2 pounds of downside potentially. Here we'll look at the local chart as well. It looks the same. It's not, maybe a hair less clean, but it still looks definitive in terms of the head and shoulder setup. Same thing. So we're looking rands. In rand terms, we're going to go from 225. We dropped out at 185. That gives us a scary target of 40 rand to the downside from 185 on the head and shoulder. So I think initial target around maybe 165, but we're going to be looking for a big downward move here in Anglos on the back of this bomb out from the head and shoulder. So watch it today. It was down 4.5% in London yesterday, so it was one of the big underperformers. We're going to be looking for some follow through today. 185 and 1042 are those neckline levels, and in Anglos rands and in pence. So just keep an eye on those levels today. All right, Foschini Group. Finally, after making, and this, I wouldn't call this definitive by any stretch of the imagination, but we closed 57 cents above the 180 level, which is our first close above that level. This thing is, I mean, you can see how many days we've been showing this chart over and over just so you guys keeping an eye on it and know how important it is. Definitely been, the pullbacks off this level have gotten smaller and smaller and smaller. We finally gotten the breakout. Look for this thing. If it can hold above 180, I like it. If it gets a little bit of traction and pushes a little bit higher, then I like it a little bit more. I think we can get a move to 200 in Foschini on that breakout. Naspers, this freaking thing shook me out. I'm sure it shook a lot of the other guys out as well. You know, we talked about this the other day. You know, we had shown the breakout on this pattern. The 2 days that we had where we sold off so hard. Once we had just broken out, I mean, it was just so hard to hang on through that patch. That's what Naspers does. Typically, it always seems to have a little period of shakeout, and then all the soft holders get out, and it has a 2-day move that's always quite spectacular. So we obviously gapped up here on a big move on Monday, and then yesterday we had a huge follow through. We closed up about 10 or 12 rand in the auction, if I'm not mistaken. So nice breakout happening here. It probably gives us the start to our move to the 1200 or to the 2000 rand target, and I think this is one to watch. So if we look here just on the daily close, I think we re-broke out, call it here at call it 1820. So maybe a new level of support to around 1820. As long as we can hold that, I think things are looking bullish for Naspers, and Tencent actually has managed to hold up well overnight tonight. The last one that we're going to look at is BTI, British American Tobacco. You can see here we got a little bit of a head and shoulder pattern as well. There's a left shoulder, right shoulder, and so the neckline here around, we're zoomed in quite a lot. Sorry, I didn't mean to do that. Delete that. No, man. Okay, I can't delete it. I don't know why. Just drag it. Just get it right like this. Okay, so you can see here that, yeah, I actually think, sorry, I was zoomed in too far. So I think that this is the best way to look at it here, is that you can look at this as this being the shoulder here. What the heck is going on? This being the shoulder here, or you can look at this being a kind of a smaller shoulder there. Either way, the neckline here or here, we're dropping out of the pattern, no matter if you want to look at this as the other right shoulder or if you want to look at this as the right shoulder. So it's kind of an interesting setup. There's definitely some sort of neckline there we've already dropped out from, but I think you can also run it as though that's the neckline. Either way, there's a significantly lower target, and I think we can look for some downside here in BTI as well. That's it for today, guys. Good luck out there.